Hello financial fans, welcome back to another stock analysis. Today we'll be covering Broadcom stock ticker AVGO. Broadcom is a globally recognized leader in the semiconductor industry, known for its expertise in designing and manufacturing advanced integrated circuits and related technologies. The company's broad portfolio encompasses a diverse range of products that power and enable numerous electronic devices and systems. Broadcom specializes in developing cutting-edge solutions for wireless communication systems, including Wi-Fi, Bluetooth, and cellular technologies, which are crucial for seamless connectivity in smartphones, tablets, laptops, and other mobile devices. Additionally, Broadcom plays a pivotal role in the networking and data center domains by providing high-performance semiconductor solutions for routers, switches, servers, storage systems, and other infrastructure components. These technologies enable efficient data transmission, improved network performance, and enhanced security. Broadcom is currently sitting at a market cap of $338.8 billion, and their revenue in 2022 was sitting at $33.2 billion, and the dividend yield is currently 2.26%. 26% of the revenue from Broadcom is generated through software, 26% through networking, 24% through wireless, 12% from storage, and the remaining 12% from broadband products. To determine the final valuation of the company, we'll be using a margin of safety. The margin of safety will be based on the financial ratios, the financial health, and the growth of the company, and we'll be using a standard margin of safety of 25% that can never go below 0%. The margin of safety can either increase or decrease based on the ratios that we're going to look at in just a moment, and the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in our scale, bright red will mean a 5% increase, orange will mean no change, light green will mean a 5% deduction, and bright green will mean a 10% deduction. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green will mean a 5% deduction from a margin of safety. The first two metrics that we'll be looking at are the EBIT growth and the margin growth. The EBIT has gone up over the years, going from $800 million in 2013 to over $14 billion in 2022. The average EBIT growth during this period was 50.7%, which is a 10% deduction from margin of safety. The margin has also gone up significantly, going from almost 23% in 2013 to over 43% in 2022. The average margin growth is a very nice 14.8% annually, which is another 5% deduction from a margin of safety. The next two ratios that we'll be looking at are the dividend growth and payout ratio. Dividends have also gone up over the years, going from $1.15 a share in 2014 to $18.40 a share in 2023. The dividend growth is an incredible 42.6% on average, which is a 10% deduction from a margin of safety. This with a payout ratio sitting at 57.4%, which is no change on the margin of safety on this metric. The final two metrics that we'll be looking at are the debt to EBITDA and return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it, and divide it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the company to pay off all of their debt. And for Broadcom, this is just over 1 year, in this case a 141% debt to EBITDA ratio, which is in the green zone, so another 5% deduction from margin of safety. The return on invested capital for Broadcom is sitting at 23.6%, indicating that the management is very efficient at allocating capital, which awards them with yet another 5% deduction from a margin of safety. Looking very good so far for Broadcom. Let's go look at the valuation models next to determine the intrinsic value of the company. The first valuation model that we'll be using is the discounted cash flow model. I've imported free cash flow of Broadcom going from 2014 to 2022. The average growth rate in the free cash flow annually during this period was almost 53%. And I'm projecting expected growth rate in their future free cash flows of 15% annually over the next 10 years. And with this percentage, we'll determine the future free cash flow for Broadcom and determine a terminal year of valuation using a perpetual growth rate of 3% and a discount rate of 9%. This gives us a sum of free cash flow of almost $610 million. And to get an equity value, we have to add the cash and equivalents and subtract the debt, giving us an equity value of $582.7 billion. And dividing this by the amount of shares outstanding, we get a discounted cash flow price per share of $1,397.79, which is almost a 72% upside out of this model. The second model that we'll be using is the dividend discount model. I've imported the dividend payouts of Broadcom going from 4 years ago to the current year. The average growth rate during this period in their dividends was almost 25%, and now projecting expected growth rate in all of their future dividends of 7.5%. I'll be using a discount rate of 9% once again in this valuation, giving us a dividend discount model price per share of $1,175.33, which is a 44.62% upside of this model. The next model that we'll be using is Graham's revised valuation formula. In this model, we take a look at the earnings per share that Broadcom is generating, the growth rate estimate projected by Wall Street, and the current yield of AAA corporate bonds in relation to the average yield of AAA corporate bonds. And we go by the theory of Benjamin Graham that a PE of a company with no growth shouldn't exceed 7. Looking at all of these metrics, we get a fair value of this model of $456.01, which is almost a 44% downside of this model. The fourth model that we'll be using is the multiple valuation. In this model, we take a look at similar companies to Broadcom, look at their stock price and the earnings per share. This way, we can determine the average PE multiple in the industry, which in this case is 27.99. All we have to do to get a fair value of this model then is to multiply by the earnings per share that Broadcom is generating, which is $29.64 a share, giving us a fair value of $829.75, which is an upside of just over 2%. And the last model that we'll be using is the mean reversion theory. In this model, we go by the theory that a company will always trade above or below its mean, and the metrics that we use to determine this are the dividend yield and PE ratio. In this case, I've imported the dividend yield of the past 5 years, and on average it has been sitting at 3.34%, while the current yield is sitting at 2.71%, indicating that it's currently overvalued on this metric. Doing the same with the PE ratio, the average PE ratio of the past 5 years has been sitting at 29.60, while the current PE ratio is sitting at 27.42, indicating that it's currently cheaper on this metric. And this gives us a fair value of $768.22, which is a 5.5% downside out of this model. If you want to get access to all of the models that I use in my videos, and much more, you can check the description from my Patreon link. Anyways, getting that self-promotion out of the way, let's go look at the final overview of a valuation next. Looking at our final overview, we've imported the discounted cash flow, discount dividend, Graham's valuation, the multiple valuation, and the mean reversion theory price per share, giving us an average of $925.42. A margin of safety we've determined earlier, using a standard margin of safety of 25%, Dunking by 5% for the debt to EBITDA, 10% for the EBIT growth, 5% for the margin growth and the return on invested capital, and 10% for the dividend growth, leaving us with no margin of safety at all, meaning that the fair value is the same as the average out of all of our models. And with the current price then of $812.73, we get an upside of almost 14%, indicating that it's after this gain still somewhat a buy. If there's any other companies that you would like to see me cover on this channel, please let me know in the comments. And thanks for watching.